everyone, you're welcome back to my YouTube channel. How are you doing today? Okay, um many of you're already aware, all right, of what is currently going on in the world right now, and basically fundamentals, right? We have major unrest that is going on all over the world, and major countries in the world are actually a key player in this, particularly between Russia and Ukraine, right? What is currently going on, whereby we have so many displaced people, right? And many people, they are now seeking uh, 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 looking for where to actually hide themselves, so that things going on in this particular specific place will not really happen to them. But as a trader, right, we will not shy away from the fact that this will majorly affect what we are doing. Basically, I used to say that I don't really follow fundamentals, right? Because whatever thing that is really want to happen in the market, right, is actually going to be indicated also with the technical. So fundamentals and technicals, I believe that they actually work together. In fact, most of the time, anytime I predict that this is really going to happen based on the fundamentals, I mean the idea I have based on my technical experience, I use that in line with the fundamental expectation. I have actually discovered that this really happened, right? And this is to say that in this kind of situation that is currently going on in the world, right, it is now important for a trader, right, to adjust his strategy, to adjust his mentality, to adjust his way of looking at the market, so that you can as well make money in the market. Because many people, if you actually look at the report, many people actually lose their fund, lose their money, lose their capital, and actually they're having losses here and there. So with this, we just need to adjust and also adapt to the patterns that the market is giving to us. So in light of this, that is why I'm here again today to share with you, right, what I discovered in the market and how you can trade successfully in this era of unrest globally. So sit down and study, even as I'm going to be sharing with you. Now, if you look at my previous videos, I've actually taught you on how to follow the market structure and how to follow the institutional order flow and things like that. But in today's class, I just want to share basic things with you based on what I've explained before, right? In this kind of market situation, right, if you want to get the best trade, now the best thing for you to do is for you to follow the trend. Right, don't try to predict what is going to happen. No, don't try to predict. Just react as market is going to be giving you the condition. I can tell you that many people that are actually predicting, oh, this is what I perceive that might really have to happen. Now, it happens to me last week, whereby I'm trying to predict, but I discovered that no, this time in this kind of market that we're having, this kind of situation that we're having, you just need to react to the patterns that the market will be giving, be presenting to you. So in this light, I'm going to give you the three basic rules I've actually taught over and over again for you to follow with the market. So this basic rule is number one, for you to follow the direction of the market. Get the direction of the market. What is the higher time frame doing? What is the time frame that you are trading from? What is that time frame currently doing? Is it giving us an higher low? Is it in a bearish institutional order flow, or is it in a bullish institutional order flow? I guess I'm really too fast, so I need to slow down. So the first thing, that is what you have to determine, the direction of the market. Then number two, we can say, then you have to get a good OB, right? The good OB is what I've explained before, right? You can look at the top side of this particular video. You're going to see the suggested video there, so you can go there and study what I have taught on the good OB. So get a good OB, right? Then lastly, then I said you can go to a lower time frame, right, to the lower time frame, right, for you to get an entry. For an entry, right? So these are the basic rules that you should follow in this kind of market unrest. And basically, what you are also looking out for is that market should break a major structure, right, before you are looking to buy or sell. Right, market should break a major structure before you can look to buy or sell. And just like what I said, the war that is currently happening, or let me call it an, right, you can see, look at what the Russian currency is currently doing, right, based on the sanctions that has already been placed on them, right. Their currency is dropping hard, right, is currently dropping hard. Now, this is not well, based on Russian alone, I mean, look at well, most countries in Europe too, right? We have their currencies also dropping, right? We have Euro USD, we have GBP USD. Most of them are actually dropping. But the basic pair that we have, the Australian dollar, is actually growing, or is actually going up, and also Japanese yen, right? So we have USD JPY is also trending down. GBP JPY is also trending down. But basically, how then do you really want to pick trade in this kind of market situation? And this is really what I want to explain to you. So that get that video on the good OB, because that's what we're going to launch onto. So that example is really what I actually spotted in this week. I traded USD card trade. I'm going to show you how I picked this trade and what I saw in the market and what actually made me to actually take this pair. And you know, the rules of other block that I've given to you, right? We have about 4 of them, or 5, or 4 or 5. So the OB that we are looking for must accumulate, right? It must accumulate, right? Or take out liquidity, right? This is actually the first thing that we want to see in there. It must take out liquidity, right? Number 2, right? It must engulf or have an imbalance in it. Number 3, it must have an impulsive move that break market structure. And number 4, right, the candle, right, must take out liquidity before price come back to it, or the candle or the bias RZ or the other block you're looking out for, or the supply zone or demand zone, right, it must reject, all right, on a pseudo, right, reject on a pseudo, right, pseudo block. Right, pseudo block is just another other block that doesn't fuse all the characteristics of other block I'm actually listing to you. So based on this fact, right, anytime you want to see something like that, I want to see market structure break another market structure, right? I want to see price action actually break another market structure. Now, the example of such that I have, right, Mark, please take note of these particular rules, right? And you can see that video I've suggested to you for you to go and study it and get this right. Now, this particular setup was taken this week, right? It was sent out, right? You can look at this particular range. Now, let me just cut it off from here. Right, I can see that market structure is bullish. As you can see, don't forget what I told you. I said you must follow market structure. Market structure must be respected based on the 3 rules I gave to you. I said you must get the direction. So the direction is bullish. So I don't want to sell when the market is bearish. I mean, I don't want to sell when the market is bullish, and I don't want to buy when the market is bearish. It is really very, very important. So I can see that there is an impulsive move here. So with this light, I'm going to put a line here. I want this particular zone to be broken. And when this particular zone is broken, right, I want to see a retracement back into the zone that actually broke that zone, right? So let's go on and see that. Right. So I can see now, look at what happened. Before this particular zone got broken, we have price actually retracing back into it. I mean, it retraced back into it. If you actually want to get more understanding of this, I've done a video on how to trade the equal high or low and follow the market structure. I actually explained this. Now you can also get the video in the suggested video, so it's really going to help you. So in this slide, I marked this particular zone, right, as my entry point, because this is actually the zone that is rejecting on this particular zone. It has an impulsive move, right, breakthrough my internal structure and my external structure. I've also taught on internal and external structure before. So in this slide, right, I was expecting price to retrace back into this, right, for me to catch my entry. Right, I'm going to show you the before chart of this particular setup. Right, let me quickly look for that and just display that to you so that you can see it. Now, this was the before chart, as you can see. So my target, I was looking for about 1 to 6 risk reward ratio. I was looking for about 1 to 6 risk reward ratio. So let's see what is going to happen. Don't forget what I said. It's because of what is going on, then you have to follow the market structure. Look at what market is doing, right? And for you to react, don't try to predict. Just follow the pattern that is really going on. Because on a normal day, many people would have been looking forward to short this particular pair. Why? Because it is all long-term expansive. So many people will be looking for it, right, to sell. And not only that, it is basically rejecting on an higher time frame rejection zone. Right, it is rejecting on a higher time frame rejection zone, and many people will surely be looking for a sell. But when you look at the pattern, you can see now I'm trading on 5 minutes time frame, but you know that price action is fractal, right? You can replicate the same thing on other time frames, right? Just like what I'm doing on 5 minutes time frame, you can do that on daily time frame, on monthly time frame, 15 minutes time frame, or even 4-hour time frame. Now let's see what will happen here. I'm looking for 1 to 6 risk reward ratio. So let's see if price tapped us in. Then what happened? Price just ran to our target. This was the entry on here, and what happened? Price just ran up there. As you can see, this was a very beautiful trade, and we are just following the trend. You know, anytime traders, this always happens to me. I mean, sometimes before, it always happens to me where anytime I want to trade and I just see that price is all-time expansive and price is just trending up, I will be looking for a a selling opportunity, even in the bullish market. And most of the time, I will just get my stop loss taken out. But when you are following the market direction, you can be sure that you are following the trend. Right, that you are following the trend, that you are following whatever thing that the market is doing. So market broke this impulsive move, right? You can see, which was actually the previous higher high. Don't forget, this previous higher high have already broken a structure before. So market came back, broke through that zone with an impulsive move. So what are we looking out for? A retracement into this particular zone and go up. Now, in case this particular zone did not work out, now you have this zone, which is zone 1, and the last zone here, which is zone 2, right? So either this zone or this zone is going to be, right, a good zone for us too. But the reason why I was looking forward to this was because this particular market has already retraced close to 100% of this high. So the low that it formed actually gave us an impulsive move that eventually broke this particular zone and this zone. So that was why I was looking forward for me to buy here. And this same setup also happened this last Friday on GBP USD, right? On GBP USD, I also took this trade, and this was a setup in here. It was a market execution, but I wasn't able to send it to people in my signal group because it was a market execution. Now this was a trade. I'm going to show you and explain to you how this trade was taken, right? This was when this trade was taken. As you can see it here, I'm going to explain that to you right now, right? And that's going to be the last example we're going to do. Just follow the videos I've actually explained before and that's been suggested to you, right? Study through those videos and you actually going to get it right. Right, let me just drag this here because this was my market predictions for the coming week. Now, let's quickly go to 15 minutes time frame. Now, in seeing 15 minutes time frame, on 15 minutes time frame, right, I can see this particular swing area. I'm going to cut this off in here. All right, price gave us an impulsive move, and definitely you can see that market structure is surely bearish. As you can see, market structure is surely bearish. So that is what I can see. Then if you actually look at this fractal too, market structure became bearish. So we have an higher high, we have a lower low, a lower high, a lower low. So price make the lower high. So I was expecting a lower low to be formed. Then my target is somewhere around this particular area. Now, so this zone again is an impulsive move that we can also look forward to. Now, so let's see what price will do. Now, I'm going to go to 5 minutes time frame because I trade mostly 5 minutes time frame. Right. So let's see what is going to happen here. Right. So the first thing I saw was just like the pattern that was formed on USD card. Now, again, look at my video on how I explain equal high on equal low, how to actually trade in line with them. Now, it's going to be suggested to you again here. Please go through that video and study it. You're going to understand fully why I'm going to take a sell at this particular spot. So with this, my pseudo was here, as you can see. Then my bias RZ was here. Now look at this. What you should understand in this particular phase is that price is doing what, right? Price actually broke that impulsive high that created an higher high, or that created a structural high in here, which was this line I've actually put here. When price came here, it retested that zone, then pushed it up again. That this particular push up that we have here, so we have price now coming back to break that zone with an impulsive move. So in this light, I was expecting, right, market to retrace back into this zone for me to take my entry. Then my target, put my stop loss around this area. My target can also be 1 to 6 or 1 to 10, right? 1 to 6. Let's just put it at 1 to 6 or 1 to 5. All right, 1 to 6 risk reward ratio, or 1 to 10, or 1 to 10, or whatever target you are actually looking out for. Or we can as well, right, just target this low, right, this low, because that was the last lower low, and we know that market structure is currently bearish as we have it now. Market structure is bearish, so we can expect price to give us a very good price action in there. So let's see what will happen. Then price tapped into our zone, and you can see how it's actually run off. So what I'm saying in essence is that basically what is happening in the world now, right? Just look for the pattern that actually works, right? You look at the pattern that market is presenting to you, right? You can backtest from 2 weeks ago, right? Just for you to know what is currently happening, or maybe a month ago, for you to know the pattern that you can actually follow. Don't just run after a pair, or don't just chase the market because market is just bullish. You just want to just enter a buy. No, let price come to your zone. And also, you have to follow all the principle I've actually listed out for you, right? Which is you following the direction and also getting a good order block, just like what I've explained here. Let me quickly go there. On USD card, that's where I have the writings there. You can see this is how to spot a good order block. The good order block must take out liquidity or reject on a pseudo. It must engulfed, have an imbalance in it. It must have a possible that break structure. This is really what I have followed in all these things. Then at the same time, based on the 3 rules I've given to you, you get the direction. Very, very important. Get another block that fulfills the characteristics of what I've explained to you earlier. Then number 2, you go to lower time frame for you to get an entry. Now, I was not using lower time frame basically. Why? Because I'm just using lower time frame to spot my direction in the first, to spot my setup in the first place. And you should know this is based on the direction. So that was why I was just taking entry directly. Right, guys, I hope you guys gain value from this, and I hope you really enjoyed this section that I've actually made for you. Please, if you are a new viewer, please kindly help to subscribe to this YouTube channel and help to like this button. Like this video is going to help the YouTube algorithm, right, to recommend this video to as many traders as possible, right? And at the same time, for our returning subscriber, thank you so much. Thank you for supporting, right? Also, make sure you like this video, make a comment, and share this content to as many traders as possible. Thank you so much, guys. I will see you in the next class. Bye bye.